For insights on what to expect next week, Unicapital Securities' Gabryle Aguila joins us live. Hi, Gabryle. Thank you so much for taking our call.
Hi, good morning. Happy to be here.
All right. So the Fed thinks the U.S. is going to see a mild recession later this year. The IMF downgraded its global growth forecast, but upgraded ours, the Philippine economy, to see the fastest growth among emerging and developing Asia. Do you think that's priced in by the markets right now, or are we just so small, so negligible, it doesn't really matter? I mean, when funds sell down EM baskets or collateral damage, which one?
Well, we don't think that the upside prospect is being priced in by the market at the moment. In fact, we're testing 6,400 support levels, which is pretty much the year-to-date low that we have so far. In fact, we think investors are pricing more on downside risks, on a potential underperformance of the GDP, given the rising interest rate environment that is poised to dampen consumer spending. At the same time, given the cautionary stance of investors with the challenging macro environment, it goes into a risk-reward perspective with how we perform compared to our peers so far this year. Our economy is posing one of the best potential growth prospects, and we're seeing some risk-related discounts to that view. We think our market performance underscores our sensitivity to inflationary challenges, being a consumer-driven economy. And in that sense, our month-on-month economic data points are more crucial to determine the economy's trajectory. And that said, economic data in April should provide us a little bit more clarity of where the trajectory will go.
Mm-hmm. All right. So where we are, while we're waiting, where do you think the index will head? What sort of range are you looking at?
Well, in the very near term, we're actually looking at the 6,400 to 6,600 range. I think to break the 6,600 resistance, we'll need a little bit more convincing economic data, probably on the April inflation data that could increase the probability of an interest rate pause in May for the BSP.
Okay. And, here's the thing. We are seeing the foreigners sell us down, but the locals aren't buying us up either. What does that tell us when even the locals are not supporting the capital markets?
Well, if we go on a broader perspective, I think over the past 12 months, especially as we dip down to the 5,700, 5,800 levels, we did see a lot of domestic investor support on the Philippine markets. We noted that the foreign participation was mostly sub 50%, and most of the support was coming from the Philippine investors. So I think on a broader perspective, since 5.7, the market's gone up to around, on a bigger scale, up to 6,700 at the start of the year, with the positivity now down to 6,400. I think we're both foreign and locals are right now on the same foot of being on a wait and see attitude, on the fence looking at economic data. And so far, while economic data has posed a positive underscoring to what may happen towards the first half of the year in terms of the economy, we are again looking for a little bit more data points with April data, and definitely on the BSP's decision.
Pretty demanding investors have become. I mean, considering we're expected to grow at the fastest clip, they're still selling us down. Right now, the PSEI is skipping some rally that the rest of Asia is experiencing. So the PSEI first 2 minutes of trade down by 1.6448, barely budging, still tilted to the downside. But if you look at where Japan is, for example, the Nikkei 225 is up by 1%. The Hang Seng Index is up by 1/5 of 1%. Most other markets here in the region, except for Australia, are in the green. When you look at commodities as well, Bitcoin is even up by 1.6, 30,755. I'm looking at gold is also up. Crude is up. Wall Street was up. Everybody's really just skipping it here. So my question is, are you at Unicapital Securities also starting to de-risk at this point amid all of the uncertainty over, future growth and prospects?
Well, if we're looking at de-risking on the trading side and in the near-term waves, of course, it does merit a little bit of de-risking. Of course, as an investor, you want to be able to get in on the dips that we're seeing right now towards 6.4, and if there's any possibility of support down to 6,200. But otherwise, on a long-term growth perspective or even our 1-year growth perspective, we're not risking outright on that. One thing that we've noted is, as opposed to last year, when the question was how deep would the macroeconomic challenges take us, the question now that we've posed for this year is when will the macro economic challenges ease early enough for us to be able to realize our growth prospects. So I guess the question on uncertainty of how deep it's going to be has now moved to a perspective of how much delay are we still looking at, rather than figuring out an outright downside.
Whenever we talk about the macro numbers, we hear a lot about bad news is good news. Kind
Right.
of like, a weak data point is bad news, but it could be taken positively because you think that's going to stop central banks from further hiking, which is good news.
Right.
But when do we go back, you think, to simply bad news is bad news again? And good news
Oh,
is good news.
oh, okay. Well, so far, since a lot of investors are kind of would like to profit take, we have been seeing good news be taken as a sell and use perspective, and bad news bringing the index down to attractive levels is good news. For some investors. I think as macroeconomics start to improve, and we see especially our PE, which is just around 12.8 to 13 times at this range, as we see that climb back to 15 times, 16 times, then we may start to see and taking news at face value. Is if it's good news, it might merit a better PE, or if it's bad news, then it might merit a lower PE. I guess where we're exactly coming from in this situation. The reason why bad news is good news right now is because as the index tips down to the low PEs, then it's quite an attractive valuation already. And as you move up, in terms of PE towards 14 times, given the uncertainty in a macroeconomic environment, you start to think of it as a little bit expensive. And that's where we see good news could be bad news.
All right. Speaking of good news, hopefully taken as good news, Jerry, Global Estate Resource of Andrew Tan reporting a 40% growth in 2022 full year net income to 2.1 billion, consolidated revenues up 47% to 7.3 billion. We're at the tail end of the earnings season, just a few more coming to trickle in. Just very quickly, what are your earnings expectations? Have you had to revise your estimates downward already for this year? Maybe not just because it's not going to be as strong as last year, but basically normalization, that earnings will be normalizing.
Well, coming off from last year and rolling over to this year, we did normalize our growth rates. We haven't yet accounted for any potential downside risks so far for this year. If in any case we're looking where we did place our valuations was of lower PEs compared to the premium that we've been getting over the 10 years for the PSEI.
All right. It's been pretty quiet on the disclosures front. And those who really take time to browse through these disclosures will notice that over the past few days, we see a lot of, one, share buyback transactions, and two, for the newly listed companies, many of them have been posting almost regularly stabilization reports. What do those two tell us about the sentiment of the market and where we are at, where we might be headed?
Well, if we're looking at the buyback transactions, then of course we're seeing Philippine corporates see the current levels as good earnings. Where if you look at any real return on that investment at these points, then it's starting to come up with decent ROIs. In terms of the stabilization reports, well, we see a lot of as you noted earlier, we've seen a lot of markets around us, including commodities, already start to stabilize. We've seen input commodities stabilize from last year. Crude oil's rather stabilized also to $86 level compared to last year. I think that really tells us, again, going back to the earlier point, right now we're asking the question of, well, when does the macroeconomic start to ease so that we can realize that growth potential? And that in effect is giving rise to lower, more attractive valuations with EPS growing while our PE is still on the low side.
All right. Gabryle, just one quick update here. We're about 9 minutes into trade, and the PSE index, you could almost hear it creeping ever so slowly and softly and lightly to the positive territory. The index is up by less than 0.1%, just 2.5 points, 64.51. But we're going to take any good news that we can. So at least it's in the green right now. So we've come to the most exciting part of the conversation. Your blind item. Talk to us about the stock that you're monitoring closely. I think you like the stock. So what do you have for us today?
Oh, for our blind stock, we like a gem in the power sector, which we view as a major conglomerate's growth engine in the making. Over the
Mhm.
past 3 years, its renewable energy portfolio has grown with a CAGR of 18% and have grown to be a fledgling multinational power company, not only focusing on Philippines' supply-demand gap, but with interests in Asia and the Oceania region. We further like the multinational perspective as it opens growth opportunities that would be otherwise limited to Philippine growth story, while likewise decentralizing risks. Most recent developments saw its exclusion from a foreign index, which we think is attributable to macroeconomic headwinds, but we see an opportunity for investors to capitalize on relatively attractive valuations with lower PE at its current market price compared to the premium it has commanded in the past years. And to that light, we estimate recurring income is set to grow slightly above twofold this year, placing further value towards its current valuations on the back of additional capacity, upward repricing of contracts, easing macroeconomic headwinds. In the coming years, with the pipeline capacities set for commercial operations in the next 3 years, we think it's in a phase of its phase of a high PE growth will begin to see substantiation through earnings growth, and again see an opportune time for investors on valuations that have only gotten this attractive in this first quarter this year.
All right. So, speaking of valuations, how much upside can shareholders
Um,
expect from this stock
we're looking at around 20%
over the next how many
over the
months?
next 12 months.
20% in 12 months. Sounds good. On that note, Gabryle, thank you so much for joining us this morning. Good
All
to
right.
see you.
Thank you very much.